Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Wednesday. It's December 13th. It's about 7:56 in the morning. The market's going to gear up to open up in about an hour and 34 minutes to be as exact as I can with you. Now, today is a big day for the market. Why? Well, two reasons. First of all, yesterday we had the CPI, came out as expected. Nothing really funky about it. What's going to be funky is the speech, the Fed conference speech at 2 and 2:30, and the PPI report. Now, the PPI usually is not as significant as the CPI unless it makes a lot of noise. Basically, what we're looking at here is we're looking at ex-food and energy to be at 2.9 or lower. Anything that's lower is telling us we're moving in the right direction. Now, this is the big number, ex-food and energy, right here, year over year. We're looking at 2.2. If it's above 2.2, if it's 2.3, 2.4, this is what's baked into the market right now. So we're looking for this report. It's going to come out in about 33 minutes, and we'll be watching out. The benefit of this report is that it comes out before the market. What you really want to pay attention to is the bond market. Now, I drew this trend line to show you where we're at. As soon as we break this trend line meaningfully, not one tick outside of it, but meaningfully, that will be the end of the sentiment that the Fed is going to lower rates in March. And I think that's going to happen in the next week. I don't think that the sentiment is going to continue. I think it's too unrealistic. As a matter of fact, I think if somebody asks Mr. Jerome Powell today at the conference about what he believes will happen, they'll say, hey, do you really think that interest rates are ready to go down in March? I think he's going to blow cold wind down that avenue of questioning. He's going to say, it's still too early to tell. We still have more than 90 days to go, over 100 days to go, and we'll determine based on economic growth. But at this time, I don't know if that'll happen. I think if that's going to be what he says, it's going to cause the bond market to start drifting lower because this sucker's pricing in right now. I think 40-something% chance that the Fed is going to start lowering rates in March. And that carrot is getting bigger and bigger, and I'm thinking to myself, I just don't see it happening. Now, I've been wrong before. I've been wrong many times before. And whether I'm right or wrong is not going to make a big difference here to my trading because I can adapt and I'll obviously update you. But this could be a big shock for the bond market and for the economic market because the odds of a March cut in interest rate it went up to as high as 52% earlier than this week. So we'll have to watch out this number, and obviously, if this number is negative or if he says something negative, it'll obviously, even if he doesn't say anything, even in an implied scenario, it'll cause bonds to go down. But I'm really curious how this play is going to turn out because to me, right now, sitting here, it's rather obvious that they're not going to do anything in March. But obviously, people don't feel that way. If it was the case, they wouldn't keep buying bonds, right? So we got to go with the flow. We've got earnings today also to worry about. We've got Adobe. They're going to be disclosing after the market closes today. So not only do you have PPI, not only do you have the Fed conference, Jerome speaking between 2 and 2:30, but you also have Adobe earnings. And Adobe's a pretty good company, pretty big company. It's a good company, but it's a pretty big company, and it can be very impactful. Now, let's talk a little bit about global economy. Stocks are up right now. The March Dow is up 36. This is very random, but I want to talk about global economy, and then I'll get into charts, and I'll do some hourly chart support and resistance levels for you on the SPY, because today's a big day, and if we break certain levels, we could see some volatility, so you may want to write these numbers down. So investors geared up for the Federal Reserve last interest rate decision of the year while awaiting the key release of PPI, which is what I told you. The Nasdaq and the SPY are just running away. S&P 20-month high, blue chips and tech at a 1 3/4 year high. Not a time to go short, folks. Not a time. Notice I have hardly recommended any short stocks in the last couple of weeks because the markets are so darn strong right now. You got to follow the market. You got to go with the flow. I told you guys, someone sent me an email that they shorted Meta and they wanted to know why they lost money. Why are you shorting Meta and why are you shorting the market, taking a position in a mega cap stock when stocks are so strong? That makes absolutely no sense. So you got to follow the market. Headline inflation eased to 3.1 in November from 3.2. This is positive. Core CPI, which excludes very volatile food and energy right now, came in at 4, unchanged. It could have been a little better, but we'll see if PPI gives us a 1-2 kick or takes us out today. Secretary Yellen, she always has something to say. She doesn't believe the last mile in bringing inflation back will be particularly challenging. Inflation is certainly meaningfully coming down. Notice she doesn't say anything about lowering rates in March. I just think that's ridiculous. 98% chance that they're going to not do anything today, which is really baked in. They're not going to do anything today. And it's the last event before the end of the year. But it doesn't mean that he can't do anything in January. They could still do something in January if things get out of whack, although I don't think they will. My take is people are confusing them waiting and seeing what happens with the fact that they're not increasing. So they think that because they're not increasing, they're going to start decreasing. But it doesn't really work that way. They increase, then they leave them alone. They see how things go, and then they start decreasing. Remember how long it took them to react to COVID and all that? They're not front run. They're not trying to front run the economy. And I think that this is a big thing, that folks are trying to front run the economy. It doesn't work that way. As I mentioned, core PPI readings are going to be watched very closely. This is the magic number, 2.2. This is all you need to know, 2.2. Last was 2.4 a year ago. They're looking at 2.2. If the number's 2.3, 2.4, it ain't going to be pretty. Crude oil inventories are today. It's not going to be as meaningful of a report because we have PPI on the table and the statement from the Fed. Although energies have been taking it under the chin. Europe is giving us a little bit of tailwind. They're digesting data. They're looking ahead of the decision. The whole world is waiting for this decision to happen. You've got China closed lower after a top leadership meeting left investors disappointed due to the absence of strong economic support measures. Liquor and real estate stocks led the decline on Wednesday. Japan, they closed slightly higher today, tracking Wall Street's gains overnight. Yet the looming Federal Reserve policy decision capped risk appetite. Chips-related stocks led the gains. So yeah, Nikkei, they're all waiting right now to see what happens. We already know that we've got Adobe after hours. We know what the big report is today. Let's talk about levels. So we go down to SPY. I'm looking at the SPY on a monthly basis. I took out the extended hours. You don't need the extended hours, but even if I leave them in, they're going to look exactly the same. So, because this is a 60-minute chart. So this is important. You should keep an eye on these levels. So the first major level of that we need to pay attention to right now is 460 on the SPY. 460 on the SPY, okay? The second major level we have to pay attention to is right here. It's this level right here, but I'm not gonna track it. I'm not gonna give you the little levels. The next major level, and this is important. Now we can easily go into the 460 level today. It wouldn't be all that. I mean, it wouldn't be such a big deal. We could undo this thing that we did yesterday right here, and we would drop down to 460. Now there is a support at 460, and if we bounce at 460 back up, that's okay. But if we break through 460, the odds are we're going to go to 454. So I want you to keep these levels in mind because these are important. First is 460, then 454, okay? Now, if we go to a 5-day chart, and let's take away extended trading hours, you could see these levels right here. You could see the meaningful of these levels right here. And if you go to yesterday, that it's really hard to see anything. But here, let me give you some short-term levels. There's some levels right here at 462. And right here, there's another one right here. Oh, too close. I'm not going to give that to you. So another one, right around 462 on the way down. So keep an eye on these levels right here. 462. And the way I find them is by going closer. So you got 462 to the downside. Then you've got 460. And then you've got 455, 462, 459.70. I'm roughballing it, and 454.38, thereabouts. You're not going to get it down to the exact signs. Keep an eye on these levels. I can't really chart to the upside because we don't have a lot of resistance there. That's very positive. That means we can go higher substantially. But let me just go here real quick. Where are we? The next level up for the SPY is right here. It's let's see right here. Right there. 472.43. So those are the levels we want to watch. And this one only has one touch, so this isn't a major level. But again, let me try to go back a little more here. Yeah, oh, actually it does. Look at that. It's a nice level right here. That's a good level right there. Right there. So let me read them again to you. 471.50 to the upside. To the downside, 460. 459.94, that's 460. Then the next one is at 454. Okay. So again, keep an eye on these levels. They're very, very important, because if we start breaking down, I could assure you that the next level is going to be right here. And I'm going to leave this on so you could see these levels. Once we break this, we go into the gap. All right, now let's talk sectors. Why don't we, right? It'll be interesting to see what has been leading the last few days. All right, let's look at 6 weeks. Home builders, semiconductor, real estate, technology, retail. You see technology, you see ETF, semiconductors, you see technology, you see consumer discretionary, you see Russell 2000. But where is, and QQQ's right in the middle. Let's go over 3 weeks. Retail, industrial, Russell's still here, but most of technology went down, took a dump. Remember, we had a pullback, and now it looks like tech is coming back. Look at this. Technology, QQQ, semiconductors. This means this is a sentiment where it's positive. It means Fed is going to be dovish, not hawkish. Okay, this is implying a dovish sentiment, that they're going to just be nice about it and say things are moving right. They're not going to talk about lowering or raising, or maybe even talk about lowering. But that's what this is. This is what this is saying, and that's one of the reasons we're long right now. Apple. We're long Apple because it's a leading stock. We're also long Discover, financial stocks. If interest rates don't go higher, it'll be good for financial stocks. So we'll see how that works out. But you could clearly see that more speculative sectors are once again leading. For a while there, the blue chips were leading. Now it's speculative again, which means we may be in for a positive surprise from the Fed. PPI today, look for 2.2, as I mentioned right here. We've got FOMC. Keep an eye on what Powell says about March. That's going to be, or what his plans next. Because if we start seeing the bonds cool off on his speech, we know automatically to start looking at those levels. And folks, before I conclude everything, please subscribe to my YouTube channel. Go to YouTube, go to search, go to Roger-Scott. Subscribe to my Telegram channel. Just go to rogerscott.com/Telegram. All of this information is in these videos, underneath the video in the YouTube channel. Also, there's a special link for my VIP room. I'm probably going to start charging again after New Year's. I've been wanting to do it again. People love my VIP room, but it's time. I want you guys there. It's happening at noon today. Do not miss out. Have a great day. And most importantly, before I let you go, I need you to hear something, and hear this good. Most traders buy stocks without knowing about their profit dates. And because of that, they stand the risk of getting trapped on a stock that's entering a sell window. So if you've ever bought a solid stock only to watch it drop on no news whatsoever, you guys seen that before many times, then you're probably a victim of this phenomena. But if you can identify these profit dates, you could completely turn the tables and hopefully make a meaningful chunk of change in the process too, right? If you want to know how to spot these profit dates on stocks, click the link below and find out all the details. And I'll see you guys tomorrow. Comment below this video. I want to hear what you guys have to say. If you have a question, send me an email, roger@rogerscott.com. Bye.